Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's November 5th. This will be a chart lesson for today, and it ended up just being a trading range day. And there's a midline in here. I don't have it in there, but it's right along through there like so. Maybe a couple of ticks lower than that. But if you measure that, that's probably an equal distance right there, and it looks about right. And you got to overshoot at the top and undershoot it or overshoot at the bottom, I guess I should say. Earlier I would have had this down here, but as the day progressed, this kind of moved up a little bit. And notice we didn't quite get down there this time, and as strong as that sell-off was, um, we just didn't. We missed it by a tick or so. But it was probably a lot of gamblers realizing that this looks like a range, and they're trying to buy, and we're way oversold here. Notice how that's straight down. It didn't get anywhere back near the EMA. So a lot of really brave, the type that are going to be aggressive and buy this strong low, probably sneaking in there early, and it just reversed real quick. Now you see we really turned down off those highs again. So the range seems to be holding, and it's only about a 7 point range, so there's not a lot of room there. Notice the two tiered channel here in the green. Um, I was looking at that early this morning, so I left it on there. It looks valid, but notice we didn't quite get to the low side and reversed. And the reason I circled this in green is because since we came up short, we've either probably going to come up short here, or we would overshoot it about the same amount. So I really thought we'd turn down here and maybe get another push down, and it didn't happen. We just went higher. And so you draw your trend line off those first two swings, and you got a couple of more chances to buy into this thing for fairly decent trades. And so we've just really gone up and down in this range today. And we came up a little short there. So generally that means you're probably going to go a little further, but so far that doesn't happen. Notice that the way I've drawn this, it could be this is the channel here, and we've already had our break, but this fits so well, I'm really thinking that's it there. Um, so we may shoot back up for a retest of the high, and make and go higher here, since we came up a little short here. A lot of times this will happen, but it looks like we're just going to end with a trading range day, and we're going to work back to the low side. So we'll have to see what happens. But that's what I saw, so I'm going to take these off. I just don't think they were. Well, I'm going to leave them on because well, no, I'm going to take them off because they're just really not relevant, and I'll show you how you could see. I'll show you how just following the short-term trend lines. Notice you got this one working down. You got the break, moved to a new low. Then we were working up. You got the break, moved to a new high. You're working down. You got the break, and you tried to go lower, and you couldn't. And you get the short trap here, and it reverses and goes higher. So you just got to go with it. And this was the first break here in the attempt to go higher, and so this was kind of a surprise here. So this one was really, I was really close going back and forth to make this one green or not, but I'll tell you why I ended up making it red. Because by the time we turned down here, you didn't have enough evidence here, but when you get this double top and you only go one tick higher, and then you shoot right through the EMA, and then there's really a little two-legged move back up there, and then it turns down. So that's why I like that trade, because I think we trapped some longs there, and you can see we obviously did, and I'll talk about that when we get there. But let me back out a little bit more, make it a little easier to see, and we'll talk about the trades and be pretty quick today. There weren't a lot of trades today. I mean, the ES is back to its kind of more typical lower volatility, less volume, and so forth. So it feels more normal again lately. But anyway, we were working up in the overnight. This thing could be. This one was a little hard to decipher, but most of this was already here by the time you get in. And if you draw it off these first couple, which is the way I usually do it, and you can see it fits on the top, fits on the bottom, and the price action pretty much stayed in there. We got a break or two right here. We're moving up, but this is in the early morning overnight hours. So you didn't really get, starting at 7, you got a first entry there. You don't want to take that. And again, this is a first entry here, but let me show you something. Notice the new high, it pulls back, it goes up, it turns back down, and then it goes back up. So if you went to a smaller chart, there is a second entry long there, but there's also this, we tried to go lower twice, and it's right off that trend line, and we didn't quite, there's your measured move. And we didn't quite have a measured move yet. So, and there was enough room there, and we did overshoot that by maybe a tick or two. And so that's the reason I kind of like that one. I did draw it green because you got to have some experience to be able to see all that. It's not something that somebody that's new to trading or that's trading with a small account might want to take a chance with, but those are sometimes the best payoffs. So I like to talk about them, and there are people that are skilled enough to see them that follow our stuff. So I try to show them. But that's why these measured moves are, that's another thing we use these measured moves for, other than looking for, targets. It helps you know whether you should try to stay with a trade or not. And so, but normally after a break and a move to a new high like that, I'd be very leery, and I still am. But if you go back and look at the things, the two-legged pullback, that's a second entry long. You can't see it on this chart, but if you went to a smaller chart, it'd be very obvious. We tried to go lower twice. It closed right inside that trend line. It was like the trend was going to reestablish itself almost, but then suddenly it turns down, and you did have your break. And notice we tried to go higher here. This one's iffy as well because we're bouncing off the EMA right here, but we didn't go very high, and it turns right back down. So it's a second entry short, and that's a pretty good move. So you figure you'll get a measured move right there, or you hope so. And you see there's leg 1, and leg 2 puts it down here. We went much further now. I think what happened is all the shorts had to exit. They recognized that something had changed, and they all had to exit. And I forgot to circle this one right here, one of the better trade. No. Actually, I got it circled. I just need to move that over like that. There we go. And then you get a little two-legged correction back to the trend line. Nice bearish reversal bar. There's not a lot of room to get out there, but this one's pretty obvious. You got that double top, a little failed second entry long, a nice bearish bar. That one's real obvious. I don't think you can go short anymore. And I like this one. There's a double top right here. It's a little failed break. Look at that bearish bar. Just go short right below that. You could have gotten filled with a limit order here, but I just say you don't want to risk it. Just go short right there because you're probably going to push down for one more test of the lows, and it ended up going all the way down to here. And this one was tempting here as well because you got a new high, first entry, pullback, second entry. But look at that bar. There's stems on both sides. There's all that, we're really struggling to go lower there. And it would have worked. I believe it would have worked, but I'm not even going to go back and check it. I'm not going to take the time. But I just don't see you going long there. Then you get the bounce. There's not a good setup for a long. There's a second entry long there, but you're back so close to those highs right across. You can see that resistance across there. That's kind of the mid point of this right here. At this point, it's obvious this is a trading range when it bounces here, and that's kind of a midpoint. And it's just not a good place to be going long. But when you get that new high, you got the break, move to a new high, and I like going short here. You might have you probably would have thought about using a limit order, and you would have gotten filled right there, even with the bottom. I doubt you'd have got filled to tick back into it, and then it drops down. There's another possible short right here, but I thought it was too close to this low and not enough room. Now, I'll tell you what I'm going to do. I'm going to go ahead and circle it in green with the stipulation that if you wanted to take that trade, it's kind of risky, but if you wanted to take it and you waited on it to break and then dropped a limit order in there, we having enough room to get out before you get here, then it's okay, because otherwise, I think you're taking too big a chance that you'll get a bounce here, but it went right through, but that doesn't always happen. So you got to understand that. And just because you see it work this time, it will entice you to do it next time. And next time, this is what happens, and you get burned right there. And so, again, it was real tempting to go short right here. And if you did, when this ended with a big stem, especially when this one ended here as well, you better exit that trade. And if it turns higher, that's a failed second entry short. Be ready to go long. And I just don't see a short there. I think you got to go long right there. Um, and you see what happened. It trapped everybody and it rushed right up. And then it pulls back here. I drew this one in, circled this in green. I wanted to talk about it. I kind of like going long here because it really looks like a trading range with a failure out the top and a failure out the bottom. But even though there's a second entry short here counting from this low, this is like one leg up with a correction and then another leg up. So on a little bit bigger picture, that's going to be a failed second entry short. And so I liked it to the long side. And another reason I'd drawn this one was really because I wanted to make sure I'd talked about this right here. Notice I had that possible other trend working down, and we didn't get to the low. I might as well put it back on there. I think it'll just make it a little easier to explain it. That's what I was looking at, and of course there was a midline, but notice how we didn't get to that low right there. That's, we should have come on back down and gotten down there. When we didn't or couldn't, that's telling you the market's something's not right maybe with this channel. And even if the channel's correct, it means the market's stronger than you were expecting here. So the fact that it came up short means you're either going to come up short here. And look, notice how it traded to there and turned down for a minute, traded back down. It looked like it was going to come up short. And if it did, then you might consider going short here. But when it didn't come up short, then you got to consider that it'll come up long by that much. So you had to wait on it to go higher. And then you might have, if you got a good setup bar here, you might think about going short, but you never got it and it just kept going higher. And that's telling you the market has suddenly gotten strong. For whatever reason, the buyers have suddenly come in. They saw this as a value area here, and I believe that the people, the traders, the institutions, whatever you want to call them, that are capable of moving the market, I think what they will do a lot of times in the overnight, they'll run it up to get a better sales price, or they'll drive it down to get a better buy price. And so that happens a lot. So be aware of that. And that's why you hit some certain areas and they've got all their automated buy orders set up and the buying starts, and they have programs that'll chase the market and everything else. And next thing you know, the things are running off in a runaway reversal that you're like, wow, what happened? It was so bearish a minute ago and now it's so strong, or vice versa. It was so strong a minute ago and now it looks like nobody would buy it for any price, and then the bottom's falling out of, kind of like that right there. So that's what causes these things. Once the momentum starts, those algorithms and then the people that were all getting long here have to start exiting. And it took this all day basically, or I shouldn't say all day, but all morning from maybe 9:30 to into the lunch hour to go that far. And then in 20 minutes, 30 minutes, it takes it all back. That's why those things happen. So, but anyway, that's why I have that circled there. So I hope that makes sense to you. The market moves in measured moves. Nothing is 100% certain, but when you come up short like that, you expect it to either come up short here, like so, and turn back down, or you expect to overshoot it about that much and then turn back down. And when neither one happens, you've got a trap there. And so I like maybe going long right there. But definitely you had to be careful about going short there for the reasons I just talked about, because this thing wasn't done yet. And, you weren't getting a measured move, so to speak. So in the end, I guess if you measured that right there and you came up here, it probably is a measured move. But look at that signal bar. That's not a very good size. This looks like a fairly decent signal bar, but it couldn't break below that low, so you've got 3 bars stacked up there, 4 really, and a couple of them are dojis, so it gets kind of iffy. And so if you went short right there and this ended like that, another clue, get the heck out, and if it turns up, you better reverse and go with it. So because that's on a bigger picture, that's a failed second entry short. And then we just kind of got stuck in this stuff. You just have to, and all we are is we're working back to the other side of the little channel, and we just hadn't got there yet. So just hang in there and be patient and wait on it to get back here. And I didn't like, even though this would be your signal bars right here, this is, I didn't like entering above them, but when this one broke higher and closed on its high, when it broke higher there, actually you could use a stop. You're only getting 1 tick late by putting a stop, but if you want to, wait till it breaks higher and drop a limit order right where you would have gotten long here, and you get the same price, except you waited to get a little more information about going long, because it doesn't look that good right here. But right here it looks pretty good, but you're looking for a bounce off that trend line, and you get it right there. I really, and this one's questionable. It went lower first and turned and went out the high side. I didn't mark it as a long though, because it's so close to that right there. There's not room to get out, and you see it hesitated right there, but it ended up working on through, and it turned out to be a good trade. So aggressive guy probably would have gone long right there, 1 tick above this bar when it, because it went lower and went out the top. But I was a little leery of it because you never know if it hits that midline and turns back down again. So it's a little bit questionable. And then you get another 2-legged pullback here. Notice the new high, pullback first entry, pullback second entry. So again, this one didn't quite close on its high. So when this bar, the little doji right here, broke higher, just drop you a limit order, a ticker right at the top, or a tick in, try to sneak in a little better, because look, it's bouncing right off that trend line again. It is a second entry, and it's not a bad signal bar, it's just not a great signal bar. So I liked, I just don't like using a stop there really. I like using a limit order. It wouldn't have mattered either way, you still got in. And I thought maybe we might get a little trap here and go higher, but we didn't. We never got it. So it kind of pulled back and just went on higher. And then this turned down, and again, let me show you this one here. Notice this new low. It goes up, pulls back, and then goes up, and then turns down. So that is like another little 2-legged correction. And notice how that shot right through that EMA. That's telling you something. You really didn't get any. You got a little bit of hesitation when this came back to the EMA and it fell below and went up. This one came back, you got a little hesitation again, but it goes below. And then this final one, you notice how you pushed up to a double top, and then 1 or 2 ticks higher, and it turns down, and it goes, look at that bearish bar. And it goes right through that EMA, and then it tries to get through there 3 more times, a little 2-legged correction back. So I like that one to the short side, and if you drew your little trend line off those first couple of closes, it kind of fit that. So I like that for a short, even though you don't really have a close outside the new high. The range is kind of coming into play, and you don't know that it's going to do that, but you figure it's going to come back and test these lows or this midpoint, and this thing just rockets down. I mean, that turned out to be a really good trade. So I kind of like that one. And then again, you shoot all the way down and you're way overdone. And when it pulls back to the EMA, look how much this looks a lot like this. And it's really just a repeat pattern. You come up to the EMA, you get your first entry, you pull back, you get your second entry. And again, it's not a very nice signal bar. It's bearish, but it doesn't close on its low. It can't break below that bar. And breaking below that right there is very, it's too much overlap in dojis, and it just looks like this right here. So just stay clear, and when it fails, just go long. And again, that's another one of the trades of the day right there. I love that reversal pattern when you're looking for a reversal anyway, down here near the lows, and when it and when you don't get a good setup for a second entry short here, if you get one and it quickly reverses, that generally means people are going to be trapped. And you can see that because all these people that were jumping in, now suddenly they're racing back the other way, and it takes it back in no time flat. And then you come up here, you get a two-legged correction back to the EMA, back to the trend line. And this pattern is very similar to this one here. You might have waited for this to break higher and then pull back and try to get you a little better entry. And you might have even waited till here and let it pull back, break forward and pull back and get you a little better entry. But it's kind of, again, another repeat pattern to this little deal over here. And if you hadn't heard me say that before, when you see a pattern once in the day, generally if you see that similar pattern again, it's going to react the same exact way. People are smart enough to understand that, and if it works once, it's probably going to do the same thing. It may not do the same thing tomorrow or the following day, but when you see those repeat patterns on the same day, or if you start to notice them each day happening and doing the same thing, then pay attention to that because it's telling you something. Obviously, there's something going on there that's causing that pattern, or else everybody else is also recognizing that pattern, or a combination of those two things. That's my thoughts on that. So I believe that's why they occur, and I've learned to pay attention to them because if you see them once, especially if there's it really works on any type of day, but if there's a big trend or a nice trend day to the upside or to the downside, and you continually see that pattern working over and over, next time you see it, jump on board, and because it's very likely going to do the very same thing it did the first time or the previous time. So, all right, I hope that's clear. That's pretty much it for today. Nothing else much to talk about here. This is just a pretty standard range kind of ES range day, and I am going to try to do a chart lesson one day this week that talks about runners are possible. I'm getting a lot of questions about, great, this works great for scalping, but can you use this to swing trade? And you can use these same entries to try to swing trade if you want. And so I'm going to do a lesson in the premium section on that. And so look for that coming up in the next few days. I'm going to try to get to that. I think it'll be a great topic and a great idea because there are some people, if you hadn't heard me say this before, I'm going to say this and I'm going to wrap it up. But when you're trading, you have to feel comfortable, and you probably noticed that if you had a really good day, it seemed real easy, you were real relaxed, it was real comfortable. And if you had a day where you probably didn't do so good, you probably didn't feel comfortable, or you didn't feel relaxed, and it just felt really hard, and you just didn't feel good about things that day. And that's very important in trading. When you're comfortable and you feel relaxed, and you trade better. So, and one thing I've noticed is that when it comes to swing trading, I'm never comfortable holding a trade over for a long period of time because they back up too much, and I can't stand, for whatever reason, my personality does not fit to see me make 3 or 4 or 5 points and then give it all back trying to get 7 or 8 points or 10 points or whatever my goal is. I'm not comfortable with that. I don't trade well trying to do that. I like entering here and figured out where my target is, which is probably going to be these highs across here. And when we get up there, just exiting. And you can see, even if I'd have exited a tick or so in front of that, it didn't go, but maybe 2 or 3 ticks higher and just racing the other way. And I didn't have to live through all that. I got my money and I exited and I looked for a new entry. So the point I'm trying to make here is I'm more comfortable and feel more relaxed scalping and shooting for smaller targets, where some people just are not comfortable scalping because they're not as good at picking out the right entries and things, and so They just don't do as good scalping. They're more comfortable buying or selling and hanging on and trying to get a little more out of it, like as a swing trader. And so the whole point I'm trying to make is that figure out what you're good at or what you're comfortable doing and try to work from that point. Don't try to force yourself into a corner of being a scalper if that doesn't work for you, or don't try to force yourself into the corner of being a swing trader if that doesn't work for you. Figure out what you feel most comfortable doing and go with that. So I hope that's clear. I hope that makes sense. And it's a good learning point. If you didn't learn anything else today, that's a good point. Something that maybe will help you. So, but I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.